Money on my mind, looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer some of the Ask James questions of the day. Our first question is from Ian. And he says, I own a lot of NVIDIA stock and stocks in the Magnificent Seven. Do you think now is the right time to sell my tech stocks? Now that is a tough question, because certainly they've been doing well. And it's going to depend upon your situation. And here's the important thing to realize about what's happening in the market today. This year, with the market hitting a couple of new record highs, again, one just being, last week or so ago, it's starting to broaden out. It's not just the tech stocks anymore that are kind of dragging the S&P 500 along behind it. It's lots of different sectors. It's even some international stocks. So it's starting to broaden out from just the tech sector alone, which is good. We've been waiting for that. And frankly, Ian, certainly, it's still February right now, February 2025, but even the value stocks, the more conservative value stocks, are outperforming the growth stocks, right? The technology stocks, or the growth stocks, they're the ones with the higher price to earnings ratios that have all this momentum, right? They're known as momentum stocks. And it's not just technology, right? There are other stocks out there that are momentum stocks as well. And for the last 2 years or so, those growth stocks, those momentum stocks have really led the market, especially, as you're pointing out, the technology sector. But so far this year, what we've seen is a broadening out where other sectors are starting to come out and frankly, do better than technology. This is particularly important for investors who are focusing on generating reliable income from their portfolios. Remember, while tech stocks can offer excellent growth potential, they typically provide much lower dividend yields compared to other sectors, utilities or consumer staples or real estate investment trusts. Now, for those approaching retirement, having a diversified income stream is often more crucial than capturing growth alone. So it's good to see the S&P 500 hit a new record high, but it's even better to see it hit a new record high in because it's not just technology, it's everything else. This broader market participation could present opportunities to rebalance into some higher yielding sectors while maintaining exposure to technology's growth potential. So you don't have to give it up. So now is the time to start some small rebalancing into more specific income generating alternatives that might complement your tech holdings. Ian, that's a great question. And if you want to send in your question like Ian did, you can do so by emailing them to poolelock@poolelock.com. All right, great. Let's move on to our second question today. And this question comes from Kyle, and he says, I'm really worried the stock market as a whole is just getting too high. It feels too frothy. Do you share my concerns? All right, Kyle. I've heard that a lot. A lot of the naysayers might say that. In fact, one of the chief investment officers at our registered investment advisory firm, who's in charge of equity, our stock portfolio, says ratios are slightly overvalued right now. And of course, when the equity guy says equities are overvalued, it's time to listen for sure. But Kyle, you have to look and say, okay, what do we see happening now in the economy, in the markets, that's positive versus what's happening that's negative right now? And right now, the prognosis for growth is pretty strong, right? The last quarterly earnings report came out with a lot of sectors that I think the market thought was going to be weak, and they came out strong, and not just technology, lots of other sectors. Then that's what helped the S&P 500 hit a new record. a new record high. Now, we have some good news in terms of economic growth. Now, even the Federal Reserve is struggling to tamp down inflation. Why? Because demand for goods and services is so high. That's good for corporate America. It's good for the stock market, right, Kyle? Then you have to look at the other side. Well, what kind of black swan events could come out? What kind of negative things could happen in the world, that could knock us off our perch? And the problem with black swan events, Kyle, is that you never really know what or when it's going to happen. If they were that easy to predict, people would be predicting it all the time. But right now, it's hard to see what could knock things off its perch. A couple of years ago, I was worried a bit about interest rates going up and what that could do. Well, the Fed seems to have just leveled off with interest rates now, right? So that's not a negative effect. Now, geopolitical things are, at least stable for now, as stable as they can be, with what we have going on in the Gaza Strip and between, the Ukraine war. I feel like the markets themselves probably still have some upside potential, but if you're retired and you're close to retirement, that's why you're watching this show, then the prudent thing to do is to go to higher dividend stocks. Go to higher dividend value stocks. And here's something really important to consider. Many of these dividend-paying companies have consistently increased their payouts for decades, even during market downturns. So we're talking about companies in sectors like utilities, consumer staples, telecommunications, things that provide essential services people need regardless of economic conditions, right? So that if I'm wrong and we don't get the market goes down, there's a drop. Well, at least it won't necessarily postpone your retirement. At least you get those dividends coming in that, okay, you might retire with less money on your balance sheet, but if those dividends stay the same, then you're still okay month to month to retire. So remember, in retirement, it's not just about preserving capital, it's about generating reliable income streams that can help maintain your lifestyle regardless of market valuations. That's really the best advice I can give you at this stage, Kyle. Hey, great question. Awesome questions today. If you would like to send in your question, you can do so by emailing them to poollocke@poollocke.com. And if you like what you heard, go ahead, like and subscribe to our channel. I'm James Locke, your retirement income source. I'll see everyone next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear. Savings in the